Hello money magnets and master traders, it's your Uncle Charters here, and we have a new all-time high close for the S&P 500. Not a new all-time pivot high. I think today's high was at 689.25, but this was the highest that SPY has ever closed on an official daily chart candle. New all-time high close. The bulls have been winning, and I wonder if they can continue to set new records, new highs for the S&P 500, or will the bears finally step up and give us that rug pull? Thank you to Jay Powell for the volatility yesterday. I have to say it was some good trading yesterday and it was some decent trading today. This was yesterday's price action. We'll talk about yesterday's price action. And as you guys can see, how did we trade it? Well, we had a 683 level, and when FOMC dropped yesterday at 2 o'clock Eastern time, it recaptured my 683 level. It cleared the 684.5 level, and it gave us a pivot high very close to my 686 level. So good level to level trading, but it wasn't until Jay Powell spoke. It wasn't until 2:30 p.m. Eastern time yesterday when the real action began, when we cleared 684.5, we cleared 686, smashed that 688 target right there, cleared it on the next candle, and smash the next target I had, 689.7, up above. Some really good level to level trading. Uncle updates and gives out the alerts all in his Discord, and it's just a pleasure for me to trade this market and to help others make some really good money. It was some good trading today as well, as you guys can see. We start off with a rejection from the 686 level. We broke down 684.5. Let me get my pink line here. 684.5. Boom, that's a nice arrow. And then we had a false breakout setup. And it just melted up for the rest of the day after we had that false breakdown. Now, if this confuses you guys, just remember, Uncle finds levels, support, resistant levels. When we break down support levels, we enter puts. When we break out resistant levels, we enter calls. And I said, I give the alerts in my Discord. I give guidance. So if my members get confused, Uncle is there to guide them on when to enter, when to exit. Most of the time, more than 60 to 80% of the time, we exit with profit. Level to level style though. Level to level style. No home run moves unless we do it with runners. And yes, there are times when we have to exit, respecting our stop loss, because as traders, we must be really good with risk management. Uncle finds the levels, the setups, and then we all trade it unbiasedly, up or down, it doesn't matter. And as you guys can see today, the bulls won. So back to the daily chart. What is the plan now? Well, we're above the 5 DMA. As you guys know, when we're above the 5 DMA, it's bullish in the short term. We're above multiple moving averages, the 20, the 50, the 200, new all-time high close. What's next? Well, I don't know what's next, but what I do know is the levels and the setups that I'll be watching for to end the week. And tomorrow's Friday. Friday is usually a volatile day. We'll see if that trend will continue. And I'm going to identify the bull case scenario and the bear case scenario for you guys. The reason why I do that is because I want us to be prepared for anything. In case the market continues to go up, we'll know how to react to it. We'll know how to trade it. And if the market finally reverses, like give us a real deal reversal, I'll let you guys know what to look out for and how to trade it as well, because the money is made in the trading, not in the prediction, because I could be right, I could be wrong, but I'd rather talk about how do we trade it. So first things first, the bull case scenario. 689.7 was the previous all-time pivot high, and it still is, from October 29. That is the resistant level for tomorrow. Now, we're above it right now, 690.5 in the post market. We don't know where SPY is going to open tomorrow, but if we're below it, obviously that's resistant level. You want to look to long if that level clears. But if we open above 689.7, you got to be very careful. It could be one of those gap and crap situations. Got to be very careful. But how do we know it's not going to be a gap and crap? When it continues to clear resistant levels. And the next resistant level I have above 689.7 is at 691, 693, 695, 697, and 698.8. That is my 1.23.6 Fibonacci level. So that would be a major target for swing traders. If we can clear 689.7, I'd rather play it level to level, take the stairways up. So if we're above 689.7, you want to look to long if 691 clears. Volatility might be low though, guys. Keep in mind, it's going to require some patience. Patience is not about waiting. Patience is about trusting the process and not trading with your ego. Now, If it does reverse, and it will be beautiful because when we get that reversal, SPY tends to take the stairways up, and you guys already know, elevated down. If we get that elevated down, the price action behavior must reflect that by breaking down support levels. So we need to stay below 689.7, and we need to break down some support levels: 688, 686, 684.5, 683, and the critical one, that's the one you want to pay most attention to, is at 681.39. We had multiple buying pressure from that Fibonacci level, 78.6 Fibonacci level at 681.39 from December 4th, December 8th, even yesterday, December 10th. The bears just could not break that level down. The market makers were holding that level up. So if they can break it down tomorrow, elevated down style, I would be bearish below 681.39, and we'll likely get a $10 to $15 drop to the downside. No, that's not an exaggeration. Now, the thing about SPY is not as volatile as Tesla, so it might not happen in one day. It might take a couple of days to play out, but the bottom line is below 681.39 is when Uncle would switch back to being bearish. QQQ, it managed to stay above the 625 level at the end of the day. We cleared that level officially yesterday. Today we opened below it, so it was looking like it was in false breakout territory, but at the end of the day, they managed to give us that V-shaped recovery intraday and close back above 625. So as long as above 625, Uncle Chartist is bullish, and we can see around that 629 level, there was like a sell wall there. So if bulls can clear that tomorrow above 629, that's your bullish follow through. Gap fills at 632, and I have the next fib level, or the previous all-time pivot high, at 637. Those will be my targets as long as above 625. If you want to get bearish, we need below 625. We need to break down 621 to put a $5 to $10 drop back to the downside. It wouldn't surprise me if we drop even lower than that. If we truly want a lower high, we need to break down 625, and the critical level to the downside that I'm watching is 615.5. That's the next fib level. If that level fails, lower high in play. Here is Tesla, looking pretty choppy here. Volatility is dropping a bit on Tesla. The level I'm watching for tomorrow to be bullish is 450, and based on his downtrend line, 456. If 450 and 456 clears, I am bull bias on Tesla, and I'll favor a $20 pop to the upside. If there is more downside to be had, then the support level, the main support levels I'm watching is 444 and 442.7. If those levels fail, expect a drop down, at least down to 435.5, and if that level fails as well, we can get an M pattern playing out, which could be extremely nasty against the bulls. I'm talking a $30 to $40 drop to the downside. No, that is no exaggeration. This is Tesla we're talking about. Moving on to NVDA. It was looking extremely bearish this morning, but they managed to recover intraday towards the end of the day. If that buying pressure that we had at the end of the day continues into tomorrow, 182 and 183.4 must recapture, because below 183.4 it's overall bearish, because we had multiple closes above that level yesterday, the day before, and the day before that. So closing below that level does not help the bull case at all. So if we get back above it, I would be bullish. This pivot low that we had today could be a higher low, and we could get back above 190 and 192. Would not surprise me. But if we are to stay bearish, we need to stay below that level and break down, finally break down 180 and the 178.8 level. The bears almost had it today, but they let it slip. So if they close below that tomorrow, I would be bear bias on NVDA. Amazon has an inside candle setup. The range is 228.5 to 232.5. Anything in between that range is neutral territory for Uncle Chartist. If we are to be bullish, if I'm to be bullish, I need to see the mother candle clear its high at 232.5. Above that, I would be bull bias in favor of $6 to $10 pop to the upside. But if this inside candle pattern plays out bearishly by breaking down 228.5, I would be bear bias and favor a $10 to $15 drop to the downside. Here is Microsoft, looking kind of bullish looking kind of bearish yesterday, but it's recovered a little bit today. It's treating that 20 daily moving average as a resistance though, so it's not quite bullish behavior. If there is bullish follow through for tomorrow, 487.7 must clear. 486 and 487.7. If that happens, expect a $7 to $10 pop back to the upside for Microsoft. If this was just a back test of the 20 daily moving average, which is over a bit overall bearish price action behavior, there needs to be bearish follow through as well. The trigger to enter puts would be to break down 484 and 482. If that happens, 476.5 or lower incoming. Here is Meta going for the bounce. For me to take this bounce more seriously, resistant at 654.5 658.5 must clear. If that happens, we can get a pop back up to 658 and 659.6, and above 659.6 is when I will switch back to being bull bias and favor today's low as a higher low. But if that's not the case, if it cannot clear those resistance levels and we start breaking down support level 653 and 650, I would be bearish down to 642.8, and if that level fails, hello 631, here we come. Apple, it's trying to find buying pressure from that 20 daily moving average, and it still failed to break down that 276.7 level. We got below it intraday, but we're talking daily chart, okay? Daily chart. I need to see a daily chart close below 276.7 to really be bearish on Apple. Now, I'm not quite bullish on it either. You guys can see from this fib level around 279.4, there's been some selling pressure. So we need to clear that zone, 279.4 and 281. We cleared those two levels, Uncle would be bullish on Apple. Speaking of being bullish, I'm definitely bullish on IWM. Yesterday, they cleared a pivot high, a recent pivot high from October 27th. We had the official breakout of that level yesterday, and it was bullish follow through today, hitting the next fib level at 257.7. So that will be the equilibrium level for tomorrow. If we're above it, expect 259, 261, and 263.8 plus in play. If we are to be bearish and trust this rejection, multiple support levels must fail, which I will update my Discord members what those support levels are. But for my YouTube viewers, the main level you want to watch is 252.2. If that level fails, that is when I will switch back to being bearish. And here is the VIX just looking bearish. I don't like the VIX looking bearish like this because that means volatility is dropping, but it is what it is. And as long as below 16, 14.4, and 12.83 are my targets, be careful for a VIX spike. If it is going to switch back to being bullish, 16, 17, 10, and the 20 daily moving average around 18.7 must recapture. If that happens, we are bullish on the VIX, and SPY could be entering correction mode. And before I let you go, 3.6 billion in premium for DarkPool Level, around 688.96, and then just 1 cent below that at 688.95 was 1.7 billion in premium. The DarkPool orders are in the billions again. That means volatility, baby. I'm very excited. Watch that pivot level. That's where the big money players are getting active. Above it, stay bullish. Below it, could be pullback time. Guys, if you're interested in joining Uncle's Discord, check the pinned comment below. Let's be money magnets and limitless together. I'd love to serve you guys at a higher level. I love y'all. Peace.